Hello and welcome to China Shortcuts,
the European Chamber's weekly catch-up on China's business landscape.
This episode was recorded on 1st July 2026. On 29th June, European Commissioner for Trade and Economic Security and Interinstitutional Relations and Transparency, Maros Šefčovič, and Chinese Minister of Commerce Wang Wentao held the first meeting of the EU-China Trade and Investment Consultations, TIC, in Brussels.
A joint press release on the meeting noted that 4 initial work streams under the TIC had been identified: on trade and investment balancing, export controls, IPR, and WTO reform, with officials mandated to engage in these areas. The two sides also agreed to establish a joint monitoring mechanism to exchange relevant data, monitor trade flows, and support technical work, with a view to improving transparency, enhancing mutual trust, and managing trade frictions.
In a set of published press remarks, Commissioner Šefčovič noted that his goal is balancing the trade relationship between the EU and China, given that China's exports to the EU keep rising, while the EU's market share in China keeps shrinking, something that is not sustainable. The Commissioner also added that while the EU remains open for business, it needs to define its industrial base and keep pushing for the level playing field globally, so that its industries get a fair shot at competing.
A statement published by China's Ministry of Commerce on 30th of June noted that Minister Wang had raised concerns relating to the EU's draft Cybersecurity Law 2, as well as its Industrial Accelerator Act as part of the discussion, and that the minister had reiterated that the EU should not see China as the root of the EU's problems. Further talks are set to take place this autumn at the ministerial level. It remains to be seen if the EU-China Trade and Investment Consultations will replace other bilateral dialogues, such as the EU-China High-Level Economic Dialogue, or take place in addition to them.
Amid escalating trade and investment tensions, it is positive that senior officials from both sides are engaging face-to-face. The Chamber hopes that such talks will pave the way for a more sustainable EU-China relationship and stands ready to contribute to this end. Profits at larger industrial firms in China, those with an annual revenue of at least 20 million RMB, increased by 18.8% year-on-year during the first 5 months of 2026, according to data released by the National Bureau of Statistics on 27th June.
Strong growth was seen in both mining and manufacturing, with profits increasing by 33.5% and 20% respectively. By contrast, profits at larger firms operating in the electricity, heat, gas, and water production and supply segment of the economy fell by 2.7% year-on-year over the same timeframe.
Data published by the National Bureau of Statistics on 30th June showed that manufacturing activity in China expanded in June. The country's official Manufacturing Purchasing Managers Index, or PMI, edged up to 50.3 points in June, from 50 points in May, the threshold that separates contraction and expansion. Among the sub-indices covered by the index, the production and new orders indexes both registered expansion, coming in at 51.4 and 51.2 points respectively, indicating both supply and demand growth.
The National Bureau of Statistics Non-Manufacturing PMI, which comprises construction and services data, stood at 15.2% points in June, up 0.1 percentage points from May's level. At the same time, several sub-indices covered by the index, including for new orders, sale prices, and employment, all continue to register contraction.
On 24th June, the Ministry of Commerce issued the Measures for Industrial and Supply Chain Security Investigations, which contained 22 articles and came into effect on the same day. It follows the publication of the State Council's Regulation on the Security of Industrial and Supply Chains, or Decree 834, in April 2026, which is intended to guard against the security risks in industrial and supply chains, enhance their resilience and security, and safeguard economic and social stability as well as national security.
Decree 834 provides a legal framework through which the relevant authorities can respond to actions perceived as damaging to China's industrial and supply chain security. The measures provide further details on how related investigations are to be initiated and conducted, as well as on what action can be taken in response. The broad scope of the measures and the vague language they contain raises concerns that legitimate commercial decisions could be interpreted as violating the legislation. For example, Article 4 of the document notes that when assessing potential harm to China's industrial and supply chain security, the MOFCOM may consider the impact of actions on both China's industrial and supply chains, including essential materials, technology, capital, assets, data, information, personnel, enterprises, and projects, and the international competitiveness and development potential of China's industrial and supply chains, without specifying what criteria will be adopted for carrying out such assessments.
The measures add further uncertainty to European companies doing business in or with China and raises the possibility of potential conflicts with binding third country laws and regulations. China's growing trade surplus with the EU, as well as the increased competitiveness and technological upgrading of its firms, which are now direct competitors of European players in many industries, has led to intense debate in the EU over what this means for the bloc's economy and how policymakers from the continent should respond. The notion of a China Shock 2.0 has emerged with a heightening of concerns over Europe's potential deindustrialization.
Join us on the 3rd of July, online or in person at the Chamber's Beijing office to hear Columbia University and European Institute Director Professor Adam Tooze's insights on the China Shock 2.0 and its implications for EU-US-China economic ties. This event is exclusively open to European Chamber members. Should you not yet be a Chamber member and be interested in learning more about the Chamber's services, then more information can be found at the link in the show notes. Thanks for listening, and don't forget to tune in again next week.
In the meantime, please find useful links in the episode notes.